mic up. Good morning, everyone. So some people coming back into the room, so welcome back. My name is Nam Soon, and I'm the EY ASEAN Managing Partner for all of our business across the 14 ASEAN countries. My background is technology and financial services. So very privileged today, and I'll introduce our panelists a bit later on to just talk about and share a little bit about the topic of the rise of non-financial services institutions, partnerships and ecosystems, and how that is really changing and reshaping our industry in financial services and broader from an ecosystems perspective. I'm going to do a short intro, but I thought it would be useful to share with everyone a very recent survey that EY did, and this is a global fintech adoption survey that we do once every 2 years, a biannual basis. This is our third iteration, and what is clear from every single survey, the growth of fintech adoption, and now increasingly with partnerships and ecosystems, has just leapfrogged, particularly here in Asia. So it's not a surprise if I say that Asia is taking a lead when it comes to partnerships and ecosystems. Obviously, everyone's very familiar what's happening in China and in Korea, in India. But I think we're also proud to say in the last 18, 24 months, we've seen accelerated growth of partnerships and ecosystems here in Southeast Asia, whether it's in Thailand, in Indonesia, where there's a big e-commerce play, and of course in Singapore, where the market's small, but it tends to be a testing bed for both, and also getting VC funding, private equity, to get out to some of the larger markets in ASEAN. So I just to set the context before I invite the panelists, I just want to go through and share a couple of slides around this survey, which is available online, that EY just performed this year, 2019. Sorry, I didn't click too quickly. So we went out to, I think the interesting question here is that, would the participate, would they use a non-bank for financial services, and in what areas? And so you would see that the majority, more than 52%, say that e-wallets, and then that's not a surprise to anybody in the room. E-wallets are very prevalent. So this is the question around, if you were to use a non-financial services company, then what sort of products and services would you be keen on using? So e-wallets right up there. Online digital bank is very high up as well. And we are now increasingly seeing non-financial services institutions, whether that's a telecom operator or ride-sharing company, a retail business, big business, get into that space. You've seen the regulatory changes in Hong Kong, and now more recently in Singapore, where consortiums are being put together to apply for licenses. This is a real threat to the existing banks. The banks are not excluded from playing, but they are under pressure to really make sure that they remain relevant in the segments that are now currently targeted, whether that's in SME or consumer in these markets. And then on the other side, I think, again, I'll introduce the panels. What's really interesting is 45% say they're very comfortable to getting the products and services and financial services with a retail player. Almost equivalent number with telecom provider, and then the big tech company. Many will have heard the phrase Fintech, but equally, I think everybody now sees tech fin as well, so tech moving into fin, and plenty of examples of that as well. So some of these just validates from the survey the trends that's happening in the industry. So a little bit more detail around adopters and non-adopters. So adopters, fintech adopters, are more than twice as likely to adopt these financial services from non-financial services players. And again, if you dive down a little bit, money transfer and payments, that's the easy space, it's the low-hanging fruit, relatively easy to get in. But equally now it's getting into things like digital banking and so on. And I think, a lot of the tech fin companies and the non-financial services players, they have transformed themselves through technology. So they have a very, changed the customer value proposition. They've been able to take out a lot of friction from the system. They've been able to make it more convenient for their customers. And now the customers have an expectation that when you get into the financial services space, they expect the same level of experience as well. So of course, we all know banking is quite a bit different, even though you can do digital onboarding, but how much of that is digital versus manual? And so the banks have a big challenge, right? But I think all of this is good for the industry because it's challenging all of us to innovate a lot more. So let me just get to the next slide, and we've got a couple more, and I'll get our panel speakers up. The other one is just around, and this is really not surprising again. So if you're existing fintech user, then you're more than likely to be more comfortable with sharing of data. It's also interesting when we did the survey. This is a global survey. It's clear that the customers in Asia Pacific, and we all know the China story, where people are very comfortable with giving out data in exchange for good rates. But you also see that increasingly with many of the markets here in ASEAN. So obviously the strength of many of these non-financial services players is you touch the lives of every customer in a number of interactions in different ways, whether it's buying a concert ticket, a train ticket, paying for your telephone bill or whatever. And that gives these companies a lot of permission, especially with the attitude around sharing of data here in the Southeast Asian countries in order to offer financial services. Now, the banks are not actually written out of the equation, so that's also good news for those of us who are bankers in the room. When we asked the question, a lot of the participants said that they would have a high degree of trust if there was a financial services player involved in providing, as part of a consortium, in providing that product and service. That's obviously through years of the way they've been operating the business, and banks are known for being good at managing money, financial risk management, and all the rest of it. So as these consortiums come together, and we're increasingly seeing not single players, so some players come with capital, some come with a good technology background, many come with customers. So if you're a ride-sharing company or you're a telco, you will have the customers. But oftentimes we're now seeing also consortium players where the banks come in and they partner with some of these other players to get into markets that previously were not attractive for them, either from a market access standpoint or from more than not from an ROI perspective, right? Because it's just not profitable to serve those customers. With consortiums, with digital delivery, that's changed all of that. So that there is a role for both FS, financial services companies, and non-financial services companies to kind of play. So I'll cover quite a lot of these things, but the key message here is that tech companies, non-financial services companies, I think everyone acknowledges they have been helping to transform our industry and help to raise the level of standard from a customer service experience, from an efficiency standpoint, cost of delivery, and that's all good news. So I'm very privileged, and just one final point, I think we about 3 years ago, EY talked about industry convergence, and we had a kind of a global campaign working with many of our clients, getting partnerships and ecosystems in play. And that's everything from developing operating systems, operating models, designing processes and a technology platform, dealing with the regulators to kind of get the processes right and controls right, but also helping get funding. So every year, for example, in the MAS, where we participate in the same Fintech festival, we do a matching of VCs around the world to some 500 startups around Asia. So, we think that all of these is actually very useful, just getting industry convergence, getting partnerships and ecosystems up and running, and just continuing to grow that segment for the benefit of financial services industry. So that's my introduction. So it gives me great pleasure if I can just ask my fellow panelists to come up on stage, and I'll do an introduction. Panelists, please. So we've got Mr. Michael Moon, who's the Managing Director of Payments, Trade and Communications, Asia Pacific, SWIFT. Mr. Manatase, who's the Senior Deputy Managing Director of the Emporium. I think all of us in Bangkok will know that's a very, very nice building. And Mr. John Austin, who's the Principal Solutions Architect, ASEAN, Amazon Web Services. And Mr. Chang Fu, who's the COO for Tencent. So again, look, two very big tech companies, a very huge retailer, and a very well-established player in the payment services infrastructure space. So I thank you for having all of the panelists with us this morning. So I would just maybe kick this off and start with Michael, and then I'll get to the rest of the panelists as well. Around, and maybe an initial question around, when it comes to partnerships, can you share with the audience some of the more recent initiatives and successes that SWIFT has had in the region?
Thank you, Namasun, and good morning, everybody. Sawadee Cup. Thank you for having myself and SWIFT present at your event. I'll just make a few remarks, and I'll use a couple of slides as well, but I wanted to limit my comments to our plans and our vision with regards to payments, and particularly the types of problems that we're solving, the different types of assets and capabilities that SWIFT as a platform brings to the industry, and then I'll give a couple of quick examples, real-life examples of what we're doing with partners and how we're collaborating with the industry as well. So, first thing, we just published a couple of weeks ago a paper, and you can all access this off the internet, but here we're establishing a vision which really recognises that at a domestic payment level, everybody's experiencing payments that are super fast, they're available 24/7, they're information rich, they're simple because you can just make a payment through a mobile number. We are looking to bring the simplicity and the convenience of that domestic payment experience to the cross-border payment experience. Yeah, so we think the future is more open. We think it's very, very fast, it's instant, it's 24/7, and it's information rich. Some of you may be aware that at our network globally for payments, we're introducing a new cross-border payment standard, which is known as ISO 20022 standard. It's an information-rich standard supporting the next generation of digital and electronic payments around the world. So that's really at the heart of our vision. The second part is I just wanted to just quickly share a little bit about what is SWIFT, but more from a perspective of a platform. So we exist to take friction out of the financial industry, whether it's in payments or it's in security market transactions or FX. We operate as an industry cooperative, so we're not in business to maximise financial outcomes, and we connect 12,000 institutions around the world and allow them to safely and securely, in a highly resilient and available way, conduct financial messaging across the world. We do this to the extent that every single day we process 1/3 of the world's total annual GDP through the network. So there's some responsibility there, but there's some also scale there which brings large benefits to the industry. And when we think of ourselves as a platform, our characteristics are really in that scaled financial messaging. And the other part, in which we uniquely do as a cooperative, is we are experimenting, conducting proof of concepts and pilots. We do this in blockchain, you'll see in a moment as well, in cross-border payments, in securities markets. And we're taking on this role of experimenting on behalf of the industry. And that's a recognition that no single actor in the industry necessarily wants to do that innovation or that testing on their own. And we're increasingly doing this with non-traditional financial institutions. So we have many payment service providers, wallets, other payment network providers that all connect up to the SWIFT network to use that platform asset. So in summary, the platform looks a little bit like this, where you have different parties, banks, non-banks, corporates, financial market infrastructures, so payment and settlement systems. The BARTnet RTGS runs on top of the SWIFT messaging platform here in Thailand, and increasingly new fintech and technology-oriented providers are accessing and utilising and providing services to our network as well. And all of this is very much focused on removing friction from the industry and problems that exist at scale. I'll give you two very quick examples here. back to this vision of having the same cross-border payment experience that you experience domestically, so what you experience here with PromptPay, we've just conducted a couple of trials. One we did last year for payments into Australia and the domestic payment system. And about 2-3 weeks ago, we finished a trial with the Singapore Fast system. So many of you know Fast is really the Singapore equivalent of PromptPay. What we did is we took transactions sent from 7 different countries around the world, from 17 institutions. So we had institutions in Canada, in Luxembourg, in China, in Australia. Here in Thailand, we had 3 banks, K-Bank, Bangkok Bank, CM Commercial Bank, and they sent payments across what's known as the Swift GPI payment service, basically our cross-border payment service, and into the Fast system to reach participants on Fast. And what we found is those payments are basically performing at an instant outcome. So the fastest payment in this test was 13 seconds, and the slowest payment was 25 seconds. So we've been able to demonstrate that we can move payments from the cross-border context into the domestic context at speed, so at a near instant level. And we'd love to be able to, and we've started these conversations here in Thailand, we'd love to be able to work with the Thai community of financial institutions, PromptPay. We've been speaking to the Bank of Thailand as well about facilitating this process into the Thai market. We think it brings lots of efficiencies, lots of cost savings. It's facilitating commerce in the Thai industry, so a small business that gets paid faster in Thailand with their cross-border trade settlement, they've got that working capital to use for their next piece of business. So we think there's some value there as well. The last bit is we're about expanding as well, and one example is we're working with our R3 Quarter platform. R3 Quarter has various different businesses conducting commerce on their blockchain-based service. So businesses are conducting commerce. They need to get paid with each other. What the experience has been is many of those businesses are not ready to get paid in cryptocurrency, and that there's a very strong need to actually get paid in fiat currency. So we're working with R3 Quarter to facilitate a payment initiation into the Swift cross-border payment service in fiat currency. So we call this the GPI link, but it's really being able to facilitate trusted settlements and payments into an ecosystem of institutions that exist around the world, and for external marketplaces and platforms to get that benefit. So I'll just kind of leave my opening remarks to there, but hopefully that gives a sense of some of the ways that we're actually collaborating as a platform at Swift.
I'm sure the audience will appreciate. You covered quite a lot of material and ground, and it's just fascinating listening to you, how you leverage Swift's scale and payment rails, and working with other partners to kind of extend the payments infrastructure. If I could just switch gears a little bit and maybe hand the mic over to Kun Manatase around, earlier on I showed some of the EY findings, and it's what was interesting. We had a coffee discussion as well that a lot of the Fintech adopters are looking at quite comfortable with coming to a big retail player, and we know you're a big retail player. Could you also share some of your successes and initiatives for the benefit of everyone here?
Thank you very much. Okay, for Emporium and MKT and the Mall Group, actually our mission and goal is to escalate Thailand to become the world-class hub for entertainment and also retail. That's why we successfully launched Siam Paragon, Emporium and MKT for the past several years. The partnerships has to involve with a lot of stakeholders and a lot of people that we're doing. The reason and the recent clear example one is the launch of the SCB M-Code, the co-branding card, which we launched a lot of credit card and also debit card, and also lots of financial and non-financial services. And that's also addressed to the graph that you mentioned earlier. That's also financial services. People are also interested to adopt the fintech through our retail industry. That's close to 50%. Okay. Other than for SCB, what we benefit from partnering with them is we leverage approximately 15 million customer base from SCB customers and also our mall customers. So this we talk about the membership only. However, if we talk about also the transaction and also the store visitors, we have over 100 million store visitors per year, combining all our stores together. And that, when we multiply 2 to 3 or 4, we would have even much more in terms of the transactions. So by coordinating with them, we get the knowledge of financial solution, and at the same time, they get the new customer, they get to understand customer behavior, and also all the retail information. So that is very important for them in terms of the information, big data, and AI in the future, that we can provide additional services to the customer as well. And then in addition to SCB or financial service, we also expand to some of our online and e-commerce as well. Recently, we just announced the cooperation or the MOU signing with Lazada to develop the online and offline commerce, which I will probably touch a little bit more later during our discussion. And then there's another thing that I cannot not to mention about, which is the way to really make us to become the world class and hub for entertainment. We recently just joined hands with AEG, which is the world class, I would say world top sports and entertainment company. They manage over 100 arenas all around the world. And then we decided to open 2 arenas in Thailand at Bangkok Mall, which will be completed by 2023, and also the M Sphere, which will be completed by 2022. So this will be the 2 state-of-the-art arena that will be able to accommodate 6,000 and 16,000 people. So this will really help us to become the world-class retail and entertainment hub. So these are some of the examples of the partnership that we've been doing with Fintech and people outside the Fintech industry. And there'll be much more of the partnership that we will be doing, maybe with some of us here, and then we will start to release a little bit more in the near future.
Well, you mentioned quite a few, very interesting. I think most people will, partnerships, I think most people will rather do gaming or entertainment, or even e-commerce, which is a big market here in many of the markets in ASEAN, and to do financial services. So it's a nice hook to get into financial services. So very interesting, and we look forward, I'm sure, to hearing more details around some of the, particularly around the e-commerce and other areas. So
sure.
Thank you. Maybe I can just ask John, if you don't mind, to kind of share your experience as well.
Sure. Thanks very much for the question. So I think for us, from a Amazon Web Service perspective, cloud computing, we are dealing with all sorts of financial institutions, all the way from traditional banks that have been around for a very long time. At some point, I was working with a bank that was 150 years old, which is kind of cool. They've been around for a long time. But all the way from those traditional banks through to disruptors, people coming into the market, companies who are doing very, very exciting and innovative things. For me, like Robinhood in the US is a really exciting company. They had 1 million people waiting to join their platform at one point. 1 million customers lined up, ready to go, and it's super exciting. And they do this transaction-free, brokerage-free equities trading platform, and it's just absolutely changing the way that people buy and sell stocks and invest and everything else. So lots of really exciting things happening, I think, is the bottom line from my perspective. Both from traditional banking enterprises through to new entrants into the market who are absolutely changing the way that existing financial institutions think and the way they execute their business model. It's a great time to be in the industry, basically. Yeah, really exciting.
I'm sure everyone shares the same sentiments.
Yeah.
Just to make sure we get enough time for Chang as well. Tencent is, you started from messaging, games, and everything else, and now you're everywhere. So tell us a bit more, maybe specifically in Asia Pacific as well, and maybe Thailand.
Yeah, it's a good point you made. a lot of people, I think, know Tencent as a B2C company, right? We have a lot of games. We have WeChat, but we even have a stronger B2C, B2B services technology platform. Over the years, we've been having a big push toward cloud and smart industries technologies to help partners and collaborate with different verticals and creating solutions. I want to draw a case, a specific case to what we did in China called WeBank. I'm not sure if anybody knows WeBank, but it's the first digital bank out of China. And as the E&Y slide said earlier, right, there's this Fintech, but then this is tech coming to fin, right? And we built this from scratch. And essentially now, on a daily basis, we have 320 million transactions on that platform, right? And so how do we do it, right? We collaborated. We started with product discovery to understand what the objectives are. What do we want to solve, right? Firstly, right, we want to deliver services to our customers better, right? We want the system to be fraud-proof, right? We want to bring products to market faster. So how do we do that, and how can technology achieve that? So through collaboration and I would say years of development and iterative production releases, right? We have what we have, in WeBank today, which is the largest digital bank in China.
Fantastic. I think, can we just stay with you, Chang, for a couple more minutes, because I'm sure everyone want to hear a bit more. You mentioned, of course, WeBank, but we also know Tencent actually owns many technology solutions, and you have a choice of partners as well. And so I think the question is, when it comes to Tencent's strategy with regards to leveraging your technology to help some of your partners become more competitive or gain new market access or customers, what is that? How do you increase your business partners' competitiveness in this ever-changing environment?
Yeah, I think for us, right, our strategy when working with partners, right, we want to try to be an advisor. We want to be like a digital enabler. We're not here to say it needs to be binary. Either choose us or we'll choose somebody else, right? We're here to play with our friends here, and also we want to develop something, co-create to solve solutions or solve problems, right, and deliver a solution that brings value. Right? A lot of times, companies ask, like, where do we start? There's a lot of things that we can do to digitize, right? But where do we start? Do we start with customer-facing services? Do we actually start in the back office to improve efficiency? And so, like, our positioning is, right, we work with you guys, right, and to figure out what your biggest challenge is, how to get the biggest buck for your investment, right, and work from there.
Right. Earlier on, you talk about. Sorry, I'll just stay with Chang for a second, and then I'll quickly come back. Earlier on, you mentioned cloud, and cloud's a key technology that's increasingly seeing adoption, even in financial services, as regulators, also evolve regs to support the adoption of cloud. So, and the question is, how do you see the Tencent cloud being deployed to enhance customer experience, effectiveness, and so on?
Yeah, we have like several strategies or initiative to try to help in this area. Obviously, like for us, innovation is always key, and innovation can come in-house or through collaboration, right? But secondly, in working with partners, I see all you guys as potential partners, right? Our office here in Thailand, right, is the headquarters for Southeast Asia. We're in country, right, and we're helping to grow Tencent in this region. So with hundreds of people in our office, what we're trying to do is to, ensure that, the FSIs here or that need support, right, has a technology partner to work with, right? I would say we're here in collaboration, right, with other tech companies, right? At the same time, we're also, we want to be a trusted advisor, as I mentioned earlier. Being a trusted advisor means that we're agnostic. We can augment what you have already in terms of technology, or we can help you with developing something on our platform. But essentially, our goal is to help organization digitize, right, and anywhere possible through our cloud platform.
No, that's great. So if I can just turn the mic over to John now, and I know, we all know Amazon is a huge in the cloud and, web services space as well. Comments from you, perhaps?
Yeah, I think it's a very exciting time in the sense that, like I said, we've got these traditional financial institutions that we've been dealing with for a long time. But just even this morning, I met with a customer and they want to launch a brand new banking product in a new market here. And it's so for them to do that 15, 20 years ago would be a $100 million project. Now, it's like, okay, so we can take a core banking solution that's available to you on a per customer basis, and we can just run with that, So it's very exciting, like not just from the cool fintech perspective, but the transformation of the traditional way that we, do banking, and we look after things like current accounts and savings accounts and credit cards and everything else. Like all of that stuff needs transformation in the coming years, like 100%. So there's lots of really exciting things going on, and we're really privileged to be a part of that, and we're super excited to work with our financial institution customers, both in country here and then across the wider region as well.
Right, thank you. And I know, Michael, you've got a few interesting points to add here as well, so please.
Yeah, I mean, just a couple of specific perspectives that we see with our customers with regards to cloud in particular. Many of you are seeing these new neobanks, digital banks, getting licenses in places like Hong Kong, Australia. To your point, John, we're seeing banks become licensed and then stand up live services in the matter of months. They're procuring core banking straight out of the cloud. They're at the same time getting a few other services, often provided by third parties, but managed or supported by those core providers as well. So they can move very, very quickly. I think this is really important if you're a traditional financial institution to look at what's happening there. And then we're investing heavily in cloud from a Swift perspective as well. So our customers are asking us to help them reduce their footprint in their environment when they interact with our network or other networks. So increasingly the interfaces that allow our customers to very reliably and securely connect to the Swift network, they're being shifted to the cloud. We're also looking very closely at some of the services that we provide at a central level and the opportunities to provide those in the cloud as well. So I think the general trend is for organizations and particularly institutions to reduce the load of central technology infrastructure, which is a bit of a fortress and a castle and very hard to change. Shift that out, so hollow that center, and get the benefits of that in terms of agility, flexibility, driving down cost and efficiencies. So we're seeing a lot of that now.
Yeah, so we've heard some good perspectives from three participants around panelists around cloud. If I can just shift gears a little bit and come back to Khun Manatase around what you said earlier on about more initiatives to come. Tell us some of that.
Well, as we all know, we are here today. We know technology is playing a very important role in retail business. Today, we see that customers, they have 24/7, as you said, they have 24/7 access to product information and also all kind of promotion, and they can also get the instant feedback or opinion from their most trusted sources, like their friend and their family. They take picture, they ask, what do you feel, which color should I pick, something like that, through their Instagram, through their social media, and get the instant feedback immediately. So our job as the retailer right now is to really make sure that we stay connected with them and we reach them effectively and efficiently at the right time also. So we have to bridge, and also we have to bridge online and offline together and provide a seamless shopping experience to the customer. By doing so, we do it through a lot of channels. Like that's why we heard the word so-called omni-channel. We have to be there. We have to provide all this seamless experience to the customers. That's why lots of retailers and people are currently using lots of technology like unmanned store. Of course, Amazon has it already in the US. We've seen that. And also facial recognition, okay, which help us to understand the customer, to notify them ever since they walk into our malls, and to probably offer the customized service to them. There is technology like, okay, big data, AI. As you know, we have hundreds of millions of the transactions each year. How can we utilize those data and really make it and reuse it also to commercialize it also? Other than that, there'll be something like AR, VR, MR, all kind of technology. 3D and 4D printing. I just come back from London and we see that some of the stores, they offer specialized product. They offer something that you can customize your shoes, your product that you can sell right now. So it's this sort of technology that we are now currently have to modify. And I'm not mentioning that which one are we using. So there'll be some of those that we currently using. Not to mention about the virtual fitting rooms and the multi-currencies, the e-currency that we talk about, or the cryptocurrency, the blockchain. These are technology that, well, basically, we as a retailer who has to work with lots of transactions and lots of customers have to evolve ourselves and transform ourselves to embrace all this technology and start using them to enhance customer experience. Yeah. And then when we talk about that, ideally, ultimately, our goal is to make ourselves to become second or third places after home or workplaces that customer think of us before anyone else. So we have to evolve ourselves, making ourselves to become the place that they think of first. And also, we started to see the transition. A lot of store from online, they now even transform themselves to offline. Lots of people ask me like, okay, would brick and mortar survive in the future? I would raise this example that basically brick and mortar will continue to survive if we really provide a good and unique experience to customer. So we have to provide unique product, unique services, and unique customer experiences. That's why we see this online store that start to provide offline store as well. Why? Because they want customer to really experience the product. So some of this offline store, they allow customer to buy the product and bring back immediately. However, some of the offline stores, they only allow customer to touch, try, experience the product, and still order the product through online and make it delivered to their doorsteps. So there will be a lot of collaboration and a lot of initiatives that retail industry and many of us here, fintech, non-fintech, or techfin, have to really start bringing in to our customers, but ultimately is to create the new shopping experience, the new customers, and the job is not just finished when customer purchase the product. A lot of technology like big data and AI will come in to help us to really understand the customers, make them buy more, make them repurchase, and stay in touch with us, stay connected with us. That's why we will not end the cycle with just purchase, but we will recreate another cycle by making them repurchase and reconnect with us through technology.
Yeah, thank you. I think it's fascinating listening to you talk about transforming the customer experience. the retail store of the future and so on. And the point around online to offline, which is a big problem for many of the markets here in Southeast Asia, whether it's Indonesia particularly or Thailand, right? You may buy or sell in the marketplace on Instagram or something, but how do you get the offline to work? I think it's probably fair to say, listening to you, Emporium is doing a lot of really innovative thinking around partnerships and execution beyond just the thinking. The reality is not all of the retail industry is like that, right? So it's a broader industry question. What do you think the retail industry needs to focus on in order to kind of lift the game with regards to innovation and customer experience?
Well, there are lots of things that we need to do in order to lift this customer experience. Those technology, example of technology that many of us in retail industry starts to explore is using that. Well, actually, there is this thing that I forgot to mention about. Last night, I was while preparing for this session, I was reading one of the article. They said that 4,000 Swedish have already implanted microchip in their body. And this is just to make sure that they don't have to carry, their wallet, the credit card, so that it's easier for them to commute, to pay, to make the payment. So this is very interesting. Jack Ma just mentioned that today is no longer IT era anymore. It's the DT or data technology that everyone starts at the same time. We need to start evolving together and, really start to have the partnering with other people together. So when you ask me okay, what is the thing that we need to focus? It's actually everything. When we look at the Thailand GDP, 22% of the Thai GDP come from tourism. And we know that when tourists come to Thailand, there's 40 million people this year, hopefully. When they come to Thailand, they really spend a lot. And where they spend, of course, they come to spend at the retail outlets like Emporium, Paragon, and all this stuff. So we have to make sure that we are really the destination. And we have to make sure that we set ourselves, our positioning as Asia's or world's retail or shopping destination in order to bring in this boost up Thailand economy. And this business transformation will involve a lot of stakeholders like the mall ourselves, the tenants, the suppliers, also the payment solution that we start to see a lot of new payment solution coming in, and also the solution, the operation that we have been doing in our company, the staff, everyone have to be trained for this seamless experience as I mentioned before. So if we transform ourselves to provide a seamless customer experience and to create this sort of ecosystem, the stakeholders that involve in this ecosystem have to be really changing. And there are a lot of innovations that I mentioned earlier that we really want to do, but in the end, the stakeholder in the ecosystem are not ready to go with us. For example, sometimes you might want to do the magic mirror or the virtual fitting room. Okay, we want to link the purchase so that customer can purchase the product instantly. However, some of the tenants might not be able to share the real stock to us. So that's why the e-commerce will not happen easily. So the stakeholders have to really transform themselves and open and embrace all this kind of technology that is happening too. Okay, as I mentioned, we see a lot of things that happen for retail business. In order to survive, we have to make ourselves to become the destination that people think about and come to us. That's why we see recently there are a lot of convenience stores and lots of retail stores become banking agents or even become the service providers for lots of financial and non-financial. And we even see this much and more in the future, in the upcoming future. So the partnership is very essential for all of us. In order to move through this transition process. So we have to understand everything, we have to understand the process, we have to leverage each other's strength and sharing data and information and our know-how to each other to make this happen.
Thank you. If I just come back to John, and because we all know Amazon is much more than just cloud technology, big e-commerce player as well. Can I just ask a question around what would the company consider in terms of some of the key success factors of developing successful partnerships and ecosystems?
Yeah. So I can give you a perspective from the AWS business. Certainly, one of the things that we're very proud of and that we absolutely love and adore country by country throughout Asia is our leadership principles. So it's a really, really big part of how we operate our business. We will gladly spend 6, 12, 18 months to hire the right person from a cultural perspective, rather than hiring the wrong person just because we need to hire someone. So we're very, very keen on that, and it's one of the things that I absolutely adore about this company. Like I said, I came from a banking background and Big Four and everything else, and so
It's quite different, isn't it?
it's quite different. But being able to be a part of that is it's an amazing thing. Yeah, I think from a cloud perspective, we're very, very focused on hiring the right people, and as long as that takes, that's how long it takes basically for us.
So it's not just about the tech and infrastructure. I think Kun Manatase,
No.
you mentioned as well the talent, the training, the culture, the people. These are all important aspects of making that.
Yeah, forget all of that. I think my colleagues here from Swift and everything else, it's we can like hire people and we can ram things through and everything else, but we'd just rather be patient and forthright in terms of bringing the right people in and bringing them into our customers. So.
Yeah. Excellent.
Yeah.
If I come back to Michael, and you shared quite a bit of insight around Swift's strategy with partnering and around payments and broader than that. Could you expand on some of that a bit more?
Yeah. So maybe I could expand a little bit more on our model of collaboration and the methodology, if you like, that we go through there. As I mentioned earlier, we're a cooperative and we run a globally scaled platform for the financial industry. And our real core mandate is to take friction out of making payments across the world, or foreign exchange, or securities markets. So we have a very clear focus on starting with the problem, and I emphasize that we don't start with technology. We start with problems that exist at scale, and that if you can solve those, they have material benefit that many parties experience. At a technology level, I think you'll find that most payment technologies, the speed is quite fast. You can send a Swift message from Singapore to New York, Singapore to London, 2 or 3 seconds, the technology. Sometimes people have identified that cross-border payments can be slow. Why is that slow? There's business process friction in bank environments. They need to do reconciliation, manage FX, do reporting, manage financial crime and compliance processes, money laundering, the list goes on. All of this drags on the performance of payments. So we start with problems like that, and that's where we started in really transforming the cross-border payment experience. So what we do now with our cross-border payments is we've introduced a unique tracking identifier across payments. So you can identify where that payment is in the same way that the online store for Emporium, you can track when that parcel left the shop and when it's going to arrive at your home, like tracking an Amazon parcel. So we do that with payments around the world. And the collaboration model is very, very unique. We have a model whereby we source problems from our community at a global level. So every country we operate in, which is over 200, we're sourcing problems and we're taking them up through a filter process such that the resources of our organisation are very focused on those things that matter most. We're a small organisation, we're 3,500 people, and you tend to need to focus if you want to solve things properly there. And then we work very intensively with communities around the world. We bring people into the room, we do workshops, we look at what's really going on here in the payment, where is that friction point? If you could change that, does it really help? And we're helping financial institutions strip that out through introducing business rules on how payments perform, standards such that everything behaves the same way globally, and you can get the benefits of interoperability and harmonisation. So it's really that methodology that we followed when we just completed this test for cross-border payments into Singapore. And I forgot to mention earlier, but we'll be making a press release later today, hopefully, and you can read a little bit more about what we did there. But we're sitting down with financial institutions and other non-bank financial institutions around the world to work out what that test looks like. We're sitting down with the Singapore Clearing Association. We're sitting down with the central banks, like the Monetary Authority of Singapore, and together working out what would it look like to test whether you can do this, what do you want to prove. We can then conduct the tests using our resources and our technology on behalf of the industry, and then subject to things performing well, like they did, so payments were very fast. We then want to help the community actually go into production and start realising the benefits of that process. So we have something of that methodology. Start with the big problem, get the community really engaged, and then help take the community through that journey of getting to a live service.
No, that's great. One of the difficult jobs of moderating a panel is like this is, you can see the energy and passion and excitement, and it's a lot of, we could go on forever, but we only got about kind of 9 minutes or so left. So I'm going to kind of pose a more general question for the group and ask maybe the panelists to kind of just comment, 3 or 4 points. As you go about putting ecosystems together, and you could have a strong advantage in retail or in technology or in payments, what do you think are the key success factors to make a collaboration, a fintech ecosystem work? And we know also, it's good to put it together. It's also it's like a marriage between multiple parties, right? It can get very complicated. I have no experience in that, but I can imagine it's fairly complicated. But how do you keep it together, and what are the key success factors? So open it up to the panelists.
Sure, I'll jump in. Only married once, so just go from there. But look, it's a really broad question, but I think one of the most exciting kind of situations I came across was just not even 3 months ago, where you've got Hong Kong who have issued new virtual banking licenses. So there's a whole bunch of really exciting, new things going on. And the funny thing was, I spoke to someone who had a license from the Hong Kong regulator the last time that they did this. So they got a license like 10 years ago, and they're like, oh man, we're going to get disrupted by these guys. We're going to get absolutely nailed by this new interesting company. So all of these very exciting things are going on in that respect, and it's just, I think there's so much opportunity, country by country, region by region. It's really, really quite an amazing place to be working at the moment. Yeah.
Chang?
I'd just like to add that I think in order for it to be successful, I think you need mass, right? Creating an ecosystem, you need a lot of players, right? There's players that you, from a retail standpoint, right, you want to connect with consumers. Who are the players that can help elevate experiences, right? From a different tier, right? From an FSI standpoint, connecting to enterprise, who are the partners that will, fit into the ecosystem, so it will bring additional value, right, to the partners. So I think if there is momentum in growing the members in the ecosystem, I think that's a key strength to success.
Actually, I have the slides also. Um, to me, there is no fixed formula for this for the collaboration or the partnership. There's no fixed model, but in the end, I forgot to show this one first actually. When we look at the e-commerce, we see the opportunity that starting from 2017 to 2025, we see that the number of the e-commerce has been increasing, like exponentially until like 88 billion US dollars. And this is very significant amount. So we have to really understand this opportunity and start to partnering with other partners as well. And as I mentioned, there is no fixed model for partnership. It's more like an art. However, we really need to set a very clear objective in the first place that whether this partnership or whether this initiative is just for immediate profit or the long-term win. However, we have to also make sure that in order to make things happen and sustain, we have to make sure that the partnership will bring in something sizable and also profitable in order to make it sustain. Okay, then the ecosystem that we talk about, okay, we have to understand this also, the journey of the customers. For the partnership, we have to understand the journey of the customer, their lifestyle, the behavior, their pain points, and the media to reach them. So this is the customer-centric that we need to understand before we start anything else. We need to understand this first, set clear objective, and to make sure that it is sustained. So the collaboration will benefit all the stakeholders, and especially customer, if we have this customer-centric minded.
Yeah, I would just say the things we're interested in from partners is being able to bring additional scale to the network, because bringing new business flows to the network allows us to drive down the cost of serving our customers and return the benefits that that's to our customers as well. The point I sometimes would perhaps like to see a little bit more of in the way parties are collaborating as well is I think it's really important to understand the other party, and so from a Swift perspective, it's really understanding how does the Swift model work. We do transactions at a couple of seconds around the world, at a couple of cents the transactions are priced, so it costs 2 cents to price. That's an asset that has value for other parties. And then if you understand that we're a cooperative and we're looking at solving problems for the industry, that's helpful as well. I sometimes have a lot of fintech and organisations come to me and to our organisation and say, we'd love to partner with you. And I say, well, what do you know about Swift? And the face goes blank. I heard you guys have a lot of connections, and I thought it would be quite interesting. So I think that kind of understanding the partner is really important. It goes both ways as well. I want to understand the other organisation too. So those sort of things I think help, and it gets people clear on the problem and the objectives that sit behind that collaboration.
Thank you, Michael. So we're almost coming up to the hour now, and we started this morning the session. I shared some of the findings that EY did. I think over the last almost an hour or so, you heard some great stories and actual practical implementations and experiences that reinforces some of the survey findings. So I certainly enjoyed the conversation, hearing the conversation, and I hope many of you do as well. I think all this bodes well for financial and services industry. We should continue to see bigger, and I know many of the panelists talks about scale and innovation. So I think all of these, I think the biggest advantage and benefits that we've seen is that this is challenging our industry to take the friction out of the system, right? To get better at serving our customers, to drive more operating efficiency, which is quite difficult if you're running a legacy operating model, right? So partnerships come into quite a big play. And I think for me, it was also very fascinating listening to the choices that the different panelists or the companies that they represent, how they make those choices in terms of, because you could partner with anybody. And where do you play to your strengths, whether that's in technology or cloud or in retail or in payments. And there'll be many more that we've not heard of today. So I'm pretty sure that with these 4 gentlemen and many of us out there in the industry, the good news is that we should see more of these collaborations going on, more robust ecosystems. And you know what? At the end of the day, the biggest beneficiary is going to be the customers. And of course, we go about and grow our business. So on that note, I think we've almost run out of time. We've got 25 seconds left, so I'm trying to keep the time per my record. Thank you, everyone, for your patience and for listening. I hope you enjoyed it. And could you put your hands together and just thank the panelists as well. Thank you, panelists.